Fridays, my favorite day of the week, as you well know. And today I wanted to talk about the FDIC. I mean, we could talk about anything because this is your opportunity to ask me any question that you want. No limits. But I wanted to talk to you about the FDIC because I think they're slipping this in pretty quietly to ease banks' living will mandates. And remember, we did something on the living wills where nobody passed them. So now they're going to make it even easier to fail them. I mean, it's pretty interesting. But let's see. Federal says the agency will waive a requirement in banks' so-called living wills so they're no longer built around a hypothetical failure scenario. They don't have to be built around any scenario at all. How convenient. Instead, the regulator will look for updated resolution plans. I mean, give me a break. But they will also place less emphasis on discussion over strategy about how a collapsing lender transitions into an FDIC authorized bridge bank. Do you hear what's happening? We've got to play that clip. Can we play that FDIC resolution committee clip? Well, I'd like to introduce you to our two new videographers. I don't know. I mean, they're really amazing. And this is only their third day, so they're doing great. But I'd like to introduce you to Mimi and Jason, and you're going to get to know them very well.
Hello, everybody.
Hey guys.
We couldn't pull the clip from side.
We
couldn't get it over there and all this. We just couldn't.
Oh, they couldn't pull that clip. Okay, that's what Adam says. Okay. So you can't hear it, but you've heard it before because I played it before where they're actually laughing because the public, they don't have to know that their money in the bank is in jeopardy. It's just the players that need to know, the corporations that need to know. And after all, they don't want to create any unintended consequences, which is you taking your money out of the bank. Now, look, I'm not suggesting that you do that and put all of it in your mattress because we still have to transact. But I am saying that you should not feel safe or comfortable. There is a wave of deregulation in the banking sector that is already happening. And there was a comment about, well, markets are crashing. Okay, so when I looked earlier today, they were going up pretty substantially too. It's whipsawing. It's back and forth because of the level of uncertainty. And think about the banks. The banks are the biggest users of those unsubstantiated derivative products. And remember, derivatives are just big bets. They cannot convert to the underlying, so they're just big bets, and that is a pretty darn opaque market. Now, there are some parts of the market that might be a little bit more visible, but let me tell you, those are not the parts that you have to worry about. It's the parts that you can't see. So they're going to do deregulation. That means that you are a lot more susceptible and at risk. Don't be. Just become your own banker. Have a certain level of cash. Part of the strategy, it's built in layers and it's built upon those repeatable patterns. So there is a certain level of cash that you should keep for your first line of defense. And then it starts to shift after that with a barterable portfolio and then on to a protection portfolio and then growth and then legacy. And those are the different layers that we look at Zang Enterprises. If you don't have that done already, I'm going to really encourage you to get it done because what these markets are really telling you is how unstable everything is. And when you have a sitting Fed person come out and say that stagflation is the best option that we've got on the table, fingers crossed. Remember, stagflation is rising prices with lowering incomes. So there's your stagnation, your stagflation. That's a big problem, and that is a problem that we always see during monetary currency regime shifts. It happened in the 70s. It's happening now. I don't know. If it walks like a duck and talks like a duck and lays eggs like a duck, maybe it's a cow, but it's probably a duck. So with that, Wolf, I'm going to take your questions. And could you please go through what will happen when a crash starts? Will people still receive their Social Security and their pensions? The answer to that is yes, they or no. I mean, I don't know whether or not they're going to lock it in. It depends on how deep that crash is. Now, that should not have any impact on Social Security. However, it's not how many of those you have, it's what you can convert them into. And they always threaten that loss of Social Security, but we'll see. There could, in this administration, actually, there could be the political will to pull that trigger maybe after all of this tariff turmoil, and we'll see what happens with that. But according to everybody, a recession is more than guaranteed. But I don't think it's just going to be a recession. And you might recall, we're going to put the link on the bottom to the piece that I did in September when the yield curve disinverted, right? So let me just kind of remind you of what that is. But that is always an omen and always a sign. And a yield curve inversion is when the shorter term interest rates are higher than the longer term interest rates. And last September, we disinverted, so the shorter term yields went below the longer term yields after the longest yield curve inversion in history. And the clock for the recession has begun. But I don't think this is just going to be a recession, because we are at the end of this currency's life cycle. The next step is hyperinflation. And as you guys know, and maybe I'm wrong, I can't guarantee this, but I've already seen the indicators that we've already entered that hyperinflationary part. It's just not obvious to the public yet. But again, there's only one way to fight recession or deflation, which is what a recession is. That's with inflation. And there's only one way to fight inflation, and that's with deflation. So if we are in stagflation, we have both. Can you see why that could be a conundrum for the central banks? Because they're kind of, pardon me, damned if they do and damned if they don't. It doesn't matter what they do. We are at the end. Nothing is going to save this. And now we've got a global issue on our hands. So you might still receive your Social Security and pensions. And I'll do a piece on pensions coming up here, because we've talked about this before, but there's this huge push for private equity to now enter the pension system. And I'm definitely going to do a piece on that one, because it's important for you to see it. But the grocery store shelves being barren, yes, food, water, energy, security, barterability, wealth preservation, community, and shelter. These are all the things that we need to have in order to have a reasonable standard of living. And there are ways for you to make sure that you are secure in your food, no matter what your circumstances are. If you're in the middle of a city in an apartment, or you're out in the country when you have acres and acres, there's always a way to create that food security. And I am encouraging you so strongly to make that happen. If you're in a city, go to a community garden. They probably won't have any plots, but you can volunteer. They'll need your help. And then you can create relationships and start to build that community. So that's just one way, but it's really important, because yes, everything will skyrocket. And Ava Sintra asks, could you comment on the fact that the gold prices decreased? Yes, I will happily do that. On the fact that the gold prices decreased when the stock markets crashed last week instead of increasing. So there are a few things about this. Number one, most of the stocks are bought on margin. Margin is borrowing to buy those stocks. So when the stock markets go up, that means that they can borrow more on that same collateral. But when the stock markets go down like they are, and they've been pretty substantially, well, once they hit a certain point, and it can be 10%, they go down 10%, then you get a margin call, which means you, the investor, have to come up with more money. And if you don't come up with more money, then what happens is they start to sell your holdings to cover that, which then pushes the prices down more, which then means they have to sell more of it. So in a margin call, though, if you, the investor, are taking control, you're going to sell whatever the market will bear. And typically that is gold. Now, that's not the physical gold. That is the digital gold, because that has retained its value better than anything else. So while it is accurate that we saw spot gold go down last week, if you make a comparison, which I did, so I think you'll see this in a chart that's coming up, and then maybe I can show it to you now too. Actually, do you think, you had my screen on before. Can we go on where I can show my screen? I don't know where my mouse is, but
Just let us know when you're ready.
okay. Let me show you what I'm talking about. And anybody, by the way, can do this. In fact, I'm not on a laptop where I think my subscription is in here, but we're going to give it a shot anyway. And that's Big Charts. Come on. BigCharts.com. BigCharts.com. Or StockCharts.com. I don't know. It's a day. It's a day. What can I tell you guys? StockCharts.com. Okay. And here it is. And I'm going to show you the difference. Can you get that? Can you work on getting that up while I'm doing this?
We have it available. We just don't want to show anything that you're not willing to show.
Oh.
When you're ready, you tell us.
Okay. Well, I'm actually ready, because I'll show you guys how to do this on your own as well. We believe in educated choices. So I'm on stockcharts.com, and I put in spot gold. So this goes through yesterday, but what I want to show you is the relative performance. And so can you see where my cursor is down at the right-hand side where it says more, and then it says interactive perf chart. That is a relative performance chart. So I have spot gold in there. Now I'll put in the NASDAQ, which is right there. And you want me to put maybe that's enough. I don't know. Let's see. Nope, because I didn't PQ. That should do it. But it's not being cooperative. I just love that. All right, I'm going to do it with the S&P, since it does not want to cooperate. And I can't really see everything. It's kind of cut off on the side. I don't know why. Okay. Teeny weeny. SPX. Okay. Okay. So I know that these lines are kind of light, but the red lines are spot gold, and then the blue line is the S&P 500. And this is where they decline. Can you see it? You can see my cursor go down. Okay. So, yep, spot gold went down because they had to meet margin calls. But look at how much more the stocks went down. So this is a relative performance chart. It works really well to help you see the truth. And by the way, don't take the questions away from me till I've fully answered them, because sometimes I need to kind of refer back to them.
That relative performance chart can be used in any investment again, right? Where you're
100%.
different investments.
You can do you can actually put as many. So Adam, who does not have a microphone, he's not mic'd, but he said, does that work for any investment? Yeah, if it's listed on the stock exchange, you can put that in there, and you can look at the performance of one stock against another, one index against another, interest rates, everything. Anything. So you can look at the relative performance. And then down here is the length of time. And so we can make that as long as you want. But I wanted to show you, relatively speaking, stocks went down a whole lot more than spot gold does or did last week. And it is to make up for those margin calls. Some of it might also be because in the tariff wars, President Trump put in that bullion, so gold, silver, platinum, all of that bullion is not on the tariff list. So that could also have some level of impact on this. But I would say that primarily it's about a margin call. It is not about leaving gold. And that is a contract. We aren't seeing the same thing in the physical realm. Physical realm, I'm sleeping fine. It doesn't bother me at all. Okay. And remember too, if I don't answer your question or I answer it in a way that you don't understand it, please let Joshua know, and he'll put it up. So, because it's my job to figure out how to answer it so that you get it. That's really what I want to do too. So don't worry about it. There's no such thing as a stupid question.
You just answered the.
You know they can't hear you.
Sorry, but you just answered there was another follow-up from Wolf. You just answered the gold question, decreasing in value, correct?
Right? Yeah, the
So
gold,
Wolf,
he's saying.
Wolf's comment was.
And Wolf made a comment.
Is it because.
Stockholders
are panicking and selling their gold to pay for their expenses and debts?
It's their debts. It's really about the margin calls. So yes, that would be a debt. That is a debt, and it's something that has to happen like that. Once the stocks drop below a certain level, whatever, it has eaten up the equity in your account, right? So when the stocks go below that equity and now you're in negative equity, you have to come up with more money. So they're selling the spot gold contracts in order to come up with the money to pay those margin calls. I hope that made it more clear. If it didn't, let me know and I'll try again. And Susan asked, if we can't touch our 401ks, then where do we hide? Well, if you're holding all of your wealth inside of your 401k, you might not be able to hide. But you should also check with your administrator, because you might be able to borrow against it, and then you just pay yourself interest and pay yourself back. And therefore, you can take that money, put it into physical gold, and hopefully there is enough to balance out and properly diversify your portfolio to protect that 401k, even if it goes to zero. But you also might be able to do what's called an in-service withdrawal rollover election. In-service withdrawal rollover election. What that means is that you can typically take up to, and it depends on how this is written, so you can't hold me to this, but call your administrator, and typically you can either move up to 50% or $50,000, whichever is lower, into a traditional IRA. So yep, you can not have a tax event when you first take it out, but then once it's in the IRA, you can take it out, pay your taxes. If there's any penalties, pay all of that, because the strategy will recoup everything as well. It's designed to recoup any costs, any fees, anything, any losses, etc. So, and again, I would also say where you hide is in community, right? Bring your skill sets, bring what you have. Everybody shares, and that's how we're really going to have to get through this. Not just one person, but all of us coming together. That's how we have to get through this, so that you can create that security in all of those mantra areas. And Deb Warner asks, what do you think the chances are that they'll save the dollar as the world currency to save face for the U.S. and back up by gold? Well, the dollar, it's just a name, okay? The yen, it's just a name. So I don't think that they will, they could very well save the name because that's what they have a tendency to do. Dollars have been around for a really long time. But what backs them? They used to be backed by gold and silver. And then they were backed by less and less of that and more of debt until they were ultimately backed just by the government's ability, full faith and credit, the government's ability to create more debt. So I don't think that we're going to save the dollar as the world reserve currency. I think that the stable coins, actually, we're just working on a piece right now. I think it's coming out on Thursday or Saturday. I'm not sure which yet, but Thursday or Saturday on stable coins, because President Trump is making an attempt. Right now, we know what's happening, right? And so our previous allies, how likely are they to buy our government debt, which is how we support the dollar? Probably not as likely as they once were. And we already know that both Japan and China have been selling off their treasury holdings and not buying as much, so reducing their overall treasury holdings, and that's been going on since 2013. And so what President Trump is attempting to do is create global dollar demand through stable coins. Now, you always have to be careful of the name. So stable coins, they want you to think that this is stable, but what it's really done is it's pegged to the dollar. And they just recently passed legislation that requires that it's backed by dollars or other dollar-denominated assets on a one-to-one basis. The question is, can they grow enough demand in the stable coins? And these are corporations, by the way, that issue the stable coins. They're not governments, they're corporations. Can they create enough demand in stable coins through the corporations and on a global basis to offset the loss of buying from governments? We're about to see. But let's assume for a moment that they are able to do that. Let's make that grand assumption. Will that protect you from that loss of purchasing power? No, it will not, because 99% of all stable coins are pegged to the dollar. And remember, that means that whatever the dollar does, so does the stable coin, meaning that it looks more stable than, say, the Zim Gold currency, Zimbabwe's most current currency that they devalued overnight in October, 44%. So does it look more stable? Yes. But is it more stable? No. And it will not protect you from devaluation because it's tied to the U.S. dollar. So whatever happens to the dollar is going to happen to stable coins. So that could, at least in theory, maybe postpone the inevitable, but I don't know. There's too much uncertainty, and there's too much. It's like, I've been talking about the ground shifting beneath our feet in the terms of the treasury markets for really since 2015, which is when the liquidity, their ability to buy and sell them easily without moving the price much, that's their definition of liquidity. That dried up starting in 2015, and it's just gotten worse and worse and worse and worse. So I don't know. We could not be living in more interesting times, and we're here to help you. But that's the whole point of having gold and silver outside of the system, because then you don't have to worry about all of these massive whipsawed valuations and prices. And Dick Wooden asks, suppose you had to defend Bitcoin in a debate. What would you argue is the intrinsic value? I can give it one, and that is your ability to carry a lot of wealth on a thumb drive and go anywhere in the world. Beyond that, that's been my challenge with the Bitcoin and the cryptocurrencies because I don't see any other utility for them. But I'm always happy for somebody to show me something that I can't see, and I will be at the XRP event in Vegas the end of May. So always looking to learn. But yeah, the cryptocurrencies have to go through their test. They have not gone through their test. I think they might be now. Everything is going through the test now. But, the only financial asset that runs no counterparty risk, which is why it's survived the test of time because of its broad base of use, broad utility, because I can tell you lots of utility here. This is it. I'm sorry, guys. This is it. I wish there were more, but there isn't. So Lulu Esparza asks, I think as long as major changes and chaos continues, gold will dip. This unsettling may continue through summer, in your opinion. And that's possible, but here's the challenge. And if you want to know the truth, I'll tell you where to go. If you're looking at the spot market, that's just a contract. It is a paper contract, a digital contract that is easy to buy and easy to liquidate. And that when you're watching Wall Street or Bloomberg or any of those guys, you're looking at the contract. If you want to know what's really happening, then you have to go to the physical only markets, which is the collectible markets. And I've given you those links to, PCGS, the ultra rarities is where those top 1%ers play. And that gives you the best view, in my opinion, that gives you the absolute best view of what's really happening because these are insiders. These are an ounce of gold might go for $15 million. Well, who can afford that? Just the 1%, the elites, those that either write the laws or can influence those that write the laws. So that's where you go. What is that chart doing? All-time new highs. And they don't sell it off to me to margin call, by the way. They don't sell it off because the markets are going up and down and sideways and all of that. It is a lot more stable than that, but that is only a physical market. So that's where you can find more truth. That's where I go for my truth, and I've shared that with you guys a number of times, and well, I'm sure I'll do that again in the future too. So, but it is unsettling because people look at Wall Street and go, well, that must be how much gold is worth or how much stocks are. There is no good price discovery on Wall Street. That's done. That's one of the reasons why the system is so, it's disgusting how corrupt the whole system is. And while it can last longer than anybody could possibly imagine, yeah, it can't last forever. So
when you say there's no good price discovery on Wall Street, what are you talking about?
Okay, so Adam is asking, when I say there is no good price discovery on Wall Street, what am I talking about? What I'm saying is what you're looking at is a trader's market. The prices go up, the prices go down, things happen that quickly, and we've certainly seen that. But what were the valuations of these stocks? Does anybody even remember the unicorns where they were worth billions and billions of market value, but there were no earnings as far as the eye could see? So when I mean that there's no good price discovery, I'm saying when you look at what Wall Street is telling you a stock is worth or gold is worth or anything is worth, it's not real. It is a trading market just based on the move of that asset or that instrument, just a little bit, a pickup of pennies here, pickup of dollars there. It's just about them making money. It's not about the underlying asset. And neither are the valuations. Nosebleed levels, come on. And when things are going up in a bull market with lots and lots and lots of free flipping money, what does it matter? Because if you think that this is actually worth $20, think again, right? Does this $20 bill buy you the same thing today that it bought you a month ago? Let alone a year ago? Let alone 10 years ago? You getting good price discovery with this? No. It is all about nominal confusion. What's nominal confusion? This is the best example, right? If you had this $20 bill a month ago and you have it today, nominally they're identical. They're both $20 bills. 30 years ago, you had a $20 bill 30 years ago. Nominally exactly identical. But what that bill can buy you 30 years ago versus today, vastly different. But you still think you have a $20 bill. That's one of the beauty benefits for governments and central banks of inflation. But it's a big fat lie. You want to know the truth? This is the truth. This is the truth. You hold it, you own it. And it's real. And at some point, I cannot give you a lot of guarantees, but I absolutely can give you this one. At some point, all assets, all instruments go to their true fundamental value. So understanding what that fundamental value is critical, because if you don't get that, then that means you don't know if something's undervalued, so you want to buy it, fairly valued, so you want to hold it, or overvalued, so you want to sell it. And when you see stocks, even if they go to the moon, maybe we could have another melt up. That's certainly a possibility. When they turn on the printing presses, that money has to go someplace, right? We can get that melt up, but at the same time, the purchasing power value of the dollar is going down. And when it gets to zero, officially it's 3 cents. When it gets to zero, what do you got? Nothing. 1 trillion times zero is zero. You guys have seen ad nauseum my $10 trillion Zimbabwe note. So what does it mean? It means nothing, seriously. And Andrea Lynn Winchester, and by the way, I really do also appreciate you sharing your thoughts and your opinions. I think it's really important. This is about having this conversation. Andrea Lynn Winchester asks, I know you preach about pre-1933 American coins, but what about 1881, 1920 Australian or Chinese gold coins? If you, wherever you live, that's a collectible. So rock and roll hoochie coo, right? I talk about the pre-33 U.S. coins because that's what I'm here in America, so that's what I personally collect. But I'll tell you what, we're not the only country that has confiscated, and I don't think we're going to be the only country to do an overt confiscation again, especially since it's happening all around the world. Yes, rock and roll hoochie coo. I like them. I like them. And J.J. Watt asks, could China make a counter move? Yes, to dump U.S. treasuries on a mass level. Heck yes. And, you know, they're at if you're coming at us, we're coming back at you. And I'm going to be doing a piece on China next week, I think. I don't know. There's so much going on, and I have to pick and choose. I might be doing a piece on China, or maybe I'll bring it here, because they basically are pushing back, and they're pushing back hard. And they're big enough to have an impact. We've got a lot of stuff that's going on between the U.S. and China, and it's not just with BlackRock and the ports, it's with everything. And yes, that's exactly, I might have made that point. Oh, I made that point in the video that didn't come out yet. That's right. So yes, 100%. And China has, and so has Japan, been dumping treasuries since 2013. But could they ratchet that up? Yes, they can. Will they? If they have to.
Yeah, one of our recent videos was just talking about how China was pulling back from our treasuries, right? Or is it Japan?
Exactly. Well, both of them. It's China and Japan. And Adam, Jacqueline's going to get you in big trouble because he doesn't have a mic. And so nobody can hear but a little blah, 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 blah. So, but yeah, good point. And Gloria Corey asks, hello, Lynette. I've been a student and fan of yours for 3 years. Thank you very, very much. Wish I would. My question is, when it's time to sell our pre-33 coins, will there be a 27% premium and additional to 28% gains tax? Nope. Nope. Whatever you pay on the way in, you get 100% on the way out, not even one more penny. But we'll be there to hold your hand so that as we're executing the strategy, you will know not just when to sell, and you always have to do whatever you're comfortable with, but you will know what I'm converting it into. And then if you want to follow suit, then that would not be a horrible idea. But yes, the answer to that is no. And if we can get together in community in the U.S. and change the state laws and have them accepting gold and silver as legal tender, that removes that taxation, maybe there won't even be that, because that's about keeping you away from it. And I'm telling you right now, you don't want to be away from gold and silver. You want to hold it and you want to own it. So great question. Thank you so much, Gloria. I appreciate it. And I appreciate all of you for being here and for being fans. Because I know when you guys that show up every week, you are huge fans. And when we are ready, I didn't get to show them the amphitheater at the office because they came back here to work and reorganize this studio. But let me tell you, when we're ready to do those lives, I'm hoping that you guys can be there in person for those lives. We'll let you know when we're doing that. And Pandemonium asks, hi, Lynette. Any thoughts on the EU CBDC that will launch this October? They plan to make savings impossible by putting a 3,000 euro cap on any deposits. Will gold and silver become coined liberty? Well, gold and silver is coined liberty already. So the answer to that is yes. And they are trying to shove these CBDCs down our throats, but they're having a lot of trouble getting adoption. And so to your point, what they'll do is they'll squeeze and they'll squeeze and they'll squeeze. Now, originally in my personal strategy, and this is the same strategy we execute at Zang Enterprises, I had intended when we got into the new currency, which won't be before this, but when we got into the new currency, I would convert a chunk of my holdings into that new currency if it has a component of gold in it and it's more stable. But once they came out with the surveillance money, so the CBDCs or any of these digital coins, what I will do is I will convert them as I need it. Now, not on a day-to-day basis, but probably on like a month-to-month basis or something like that. Because you can always make a deposit, you can't always make a withdrawal. And what the central banks are talking about, and actually Switzerland is in a bit of a sticky wicket around this right now, where we might be seeing negative rates in Switzerland again pretty quickly. Right? That was a failed experiment, but it doesn't mean that they're going to do something different. The problem is that they're out of tools. So they're more than likely to do something very similar to that. It's going to be interesting to see how easily those CBDCs are accepted by the public in the EU. But in the meantime, here in the US, because of course we know President Trump said no CBDCs. Number one, he can always change his mind. But number two, the way that he's approaching it is through stable coins that are pegged to dollars. And so it's another Trojan horse. It's actually the same Trojan horse as Bitcoin to get you used to it and get you to volunteer your wealth. But yeah, will gold and silver become coin liberty? They are coined liberty, my friend. They are. And accidental homestead. Me too. I'm an accidental homesteader. Not something I ever thought I would do, but here we are. In my understanding, the stablecoins issues could target any point of the yield curve. Would that be a goal of it? I don't think so, and I'm not really exactly sure what you mean when you ask the stablecoin issuers could target any point of the yield curve. And the reason why I say that is because the issuers are corporations, and they go out and they buy. So I guess maybe that's how they could target the yield curve, because it isn't just dollars that they have to hold, but dollar denominated instruments. So they could determine when they're buying based on the yield. But actually, I'm thinking that it's going to be based upon when people deposit money and buy stable coins. Then when they issue them, because these are new, so this is a way to create new money, then they have to go and buy dollars or dollar denominated assets, and that supports the dollars. But I don't think the goal is the yield. I think the goal is to keep the dollar relevant. That's what I think the goal is. Maybe keep this game going a little bit longer, but I don't know if they can. Honestly, I don't. And Luis Fernandez asks, which books would you recommend on understanding the money system? And I would say The Creature from Jekyll Island would be the perfect place to start. Absolutely perfect. And then come back and share, because when you start reading and you start looking at it, you're going to go, no, is that true? So bring any questions you have, but that's a great place to start, Luis. And One Room Schoolhouse asks, I think we are China's biggest customer. They can't afford to lose us, but they can't afford to lose control either. And saving face is really important to China. And so if they can convert the attacks to open hands with a true negotiation, and I think that maybe they can avoid it being even worse. But even if they don't, either way, the damage has already been done. I mean, so what if the stock market goes up 1,000 points today? Are you going to go, okay, wow, dodge that bullet? What's going to happen tomorrow? Who knows? That's the whole point. And I think that's the global point. They don't really know what we want of them. And every time they come to near the goalpost kind of moves. So I've never seen anything like this in all the years I've been in these markets. That's since the 80s, since globalization was beginning. I've never seen anything like this. So other than Black Monday, I was there on Black Monday, and I'm very grateful that I was, because I know what that. But they can't afford to lose us. Can we afford to lose them? We'll find out, won't we? It's interesting. I mean, it's interesting. It's so interesting. Pondering Life asks, I gave a roll of silver to my son and told him to spend only in emergencies. He sold it in a few months. Face blue smiling. A lot of youth have no idea. You know what? That is one of the things that we are working on as quickly as possible at Zang Enterprises, but also as part of the sound money movement, which is critically important, is education, because people don't understand. I say sound money, and what is that? Who knows? Well, okay, it's gold and silver, but why is it sound money? Who knows? And by the way, what is money? Who knows? So education is critically important. I hold all my girls, my daughters, gold and silver. I mean, other than if I give them, which I do for my grandkids, a silver dollar or something like that, then I let them hold that. But most of it, I just hold for them. They'll get it when they need it. And I'm so sorry that I'm butchering this. Veganet? Okay, I would have never gotten that. Thank you, Adam. What are your thoughts on selling 20% or so of our gold holdings to buy acreage of raw land for later use? Why would you do that, right? What we know is that real estate is severely overvalued. That market is cracking big time, and the valuations are going down. So what you would be doing is transitioning out of a positive trend cycle into a negative trend cycle. And personally, I prefer to hold the lion's share of my wealth in an undervalued asset that's in a long-term positive trend, and the least amount of my wealth in an overvalued asset or instrument that's in a long-term negative trend. You do whatever you want. Now, if you had said, I need a place to create a last stand, then we have a different conversation. But if you're wanting to sell gold, to buy land, there's this bridge in Brooklyn that I don't really own it, but maybe I could sell it to you. What do you think? No, don't do it. That will not serve you well. But you do whatever you want. In my opinion, it won't serve you well. And High Resistance Chicks, is so good to see you. PG here. Lynette Zang, when is the grand... Oh, I know. When is the grand opening? Where is the schedule of Lynette's travels tours so we can find one to go to? Well, we are working diligently on our website. We are hopefully going to be at least in the new phase of our new offices in May. That's what they keep telling us, and it's really it's looking fabulous. But because we want this open house, this new office to be like an over-the-top event, and once we get in this side, now they have to do the side that we're in right now. So that, they say, will be done in July. But probably once we get into that first round, I don't know, I have to sit down and talk to Jacqueline, the president of my company, and we'll pick a date. But I'm thinking probably about, I know this is a long time, a year out from that, because we want this event to be so spectacular. We want to welcome you. So don't wait. If you want to come see us, come see us. I'm going to be at XRP in May. I will be in Kuala Lumpur in September, and I will be in Germany in the end of November. So those are the 3 dates that I have for events that are coming up. But then that could change. Once the website that we're working on is ready, then we will have all of that listed, all of it. So we're working on it. I mean, in so many ways, it feels like we've been around forever. And we have to remind ourselves that we really haven't. I mean, we haven't even really been in business a year yet. That would be June, even though we started the videos and the YouTube like February 1st, February 2nd, but we've not even been in business a year yet. And wow, have we accomplished. I mean, it's mind-blowing how much we've accomplished in such a short period of time. But I have to tell you, you guys are welcome anytime. You know, you have to let us know, but you are welcome to come any time, but hopefully not when I'm not here. Hopefully it's when I'm here. And that's true for all of you guys, all of them, all of you. And Kathy Shell asks, these stable coins you speak of are just to start getting people comfortable with CBDC like the debit card in the 90s. Yeah, it's just to get you suckered in, but I think it's actually even bigger than that. So you'll come and you'll watch this whole piece, because what this really looks like in many ways is a corporate takeover, right? And we've been watching that. You know, we've known the revolving door between Wall Street and the government has been around forever. You can see it. It's like so obvious. But these days, I mean, it's really just fascinating, because all of these billionaire corporations thought that President Trump was one of them, but he doesn't care about the stock prices. That should be pretty obvious. He has an agenda, which I can't say. Look, I don't get political. This is not about my political views. This is purely about my economic views, because that's what I was put on this planet to do. It doesn't matter who's in the Oval Office, but the more obvious things are, the easier it is for me to show them to you. Because mostly I'm trying to show you things that are not very obvious. But it should be pretty obvious that corporations are pretty darn important. And could be taking over, because the stable coins are issued by corporations, not by governments. But I do think that It is really about getting you comfortable in the surveillance economy, 100%. That, not even one teeny weeny doubt, because that's how they do it. That's how they've done it every single time. And White Cobra 67 Shelby. So I happen to be at the, what's the big car show here? You know the big car show? Barrett-Jackson. I happen to be at the Barrett-Jackson Auto Show. This has to be maybe more than 10 years ago, because I wasn't on YouTube at that time. And that was the first time they sold a Cobra Shelby for like more than $1 million or something like that. And when that gavel came down, I thought that the roar from the attendees, I thought it was going to blow the roof off of the place. It was so interesting. So anyway, that just kind of reminded me of that. So many people are not aware of, I think you're saying, of what's going on and think the government is going to save them. And neither is the central banks, but your community will. So there are two communities that we have to work on building together, because one person just can't do it by themselves. I can't do it by myself, right? And one is the local community. Critically important, because food becomes the single biggest issue for most people as we go through these transitions. So you need to create that security in all of those 8 mantra areas: food, water, energy, security, barterability, wealth preservation, community, and shelter. I've had the luxury of time, because I started that whole mantra piece shortly after 2008, because I knew the system died, period. There was not one doubt in my mind, but we don't have that same time luxury. So that's why local community is critical. There is power in numbers. Globally, we got to get sound money back in the system, because insanity is doing the same thing and expecting a different result. And if we don't take our power back as the public by demanding a sound money system, well, then we're going into feudal times where you just have a handful of people that own everything and you rent everything. And you got to think, how do you feel about that? Because I don't feel good about that. So, yeah, the government's not going to save you. The central banks aren't going to save you. The corporations aren't going to save you. You have to save you. If you don't have gold and silver, what skills do you bring to the table, right? All of that's barterable. All of that brings value to the community. And Travis Wright says, Lynette, if America revalues gold, isn't it said that China has more than we do? And isn't the one with the most gold the one who makes the rules? What's my thoughts on this? Well, first of all, I'm sure that the whole world is going to revalue. And the question is, are they going to do it one at a time, or are we just going to do it all together? Because everybody is really in the same boat, whether you're in the US or China. Now, does China have more gold than we do? Maybe, because we can't really see. We can see what they report, but no gold leaves China. So if you're going to go visit China, you better declare it on the way in, or you're not taking it out. So that's kind of opaque, and it is highly probable and possible that China does indeed have more gold than we do. Plus, we'll see what happens with the auditing, but I want the books audited at Fort Knox. I don't just want, oh, there's gold there, boom. No, we need to know who has the true ownership of that gold. Either way, isn't the one with the most gold the one who makes the rules? I think the answer to that is maybe, because I think what we're probably going to see, the system is changing. And where we were from the 80s going into globalization, that's been breaking down. But here's the conundrum. Here's the interesting part for me. And that is that while the supply chains have been shifting and breaking down and morphing and getting closer and people and corporations rebuilding in the countries, the financial system has not deglobalized. In fact, it's been getting more integrated. And with the International Monetary Fund, the IMF, I mean, they have that universal currency that is made up of every other currency on the planet. So we can have a global currency and then we can have a local currency. There's a wrench that's in this right now. We have to see where this tariff dust settles and what's next after that, because there's a lot of deregulation that's going on. There's a lot of speculation that's going on. And there's a lot of entities that are kind of trying to run for cover, but the only place to really truly hide is in the physical markets. That's where you hide real tangible assets. So I think, and the IMF, by the way, officially has, I think, either the second or third largest gold holdings. That's reported anyway. It's going to be interesting to see, because I do think that the International Monetary Fund, I think that's the most likely next, the world reserve currency, because it makes the most sense. Been around since '69. Everybody owns some. And I know they'll try and transition into it. I don't know. Let's ask that question down the road when we see where this dust is settling. And Tabor, but I can tell you this, yes, all gold will be revalued. The first time will not be to its fundamental value, but yes, all gold will be revalued in terms of those currencies, whether it's the US, China, or anywhere else. That's what they're going to have to do. It's what happens 100% of the time. So is this time different? Probably not. Tabor 911 asks, hi Lynette, is it possible for the nominal value of gold and silver to go down during a global reset while simultaneously increasing exponentially in real value? Yes, it is, Tabor 911, absolutely. So let me explain what he's saying here, because nominal, think of numbers. Think of my $10 trillion, oh, this is just a million, right? Bolivars, 1 million bolivars. And so when they do those overnight revaluations, right, the prices of goods and services look like they're going down because they lop off a bunch of zeros. Now, historically, so you can't hold me to this because I don't know exactly how this is going to unfold, but normally, or typically I should say, when they do that overnight revaluation, your stocks will reset, the cost of your bread will reset, etc. But gold kind of holds up there for, on average, about 9 months. Could be less than that, could be longer than that, but on average about 9 months. Then that too will reset in terms of the currency, and then it begins to climb again faster than anything else, because typically governments do not change behavior. They simply change how they account for that behavior. So yes, we could see indeed the nominal price, the price in terms of bolivars, the price in terms of dollars. We can see that go down, but at the same time, it buys you more goods and services because it flip-flops, right? Right now you have gold that's undervalued. You have, say, income-producing real estate that's overvalued. That's going to flip-flop. So it holds your purchasing power intact and enables you to accumulate those income-producing assets when they are super dirt cheap. So great question. Thank you so much for bringing that up. And Eclair Trejo asks, could you please explain fundamental value once more? I will explain that as many times as you guys need me to explain it. And what the fundamental value is, it's the true value of any asset or any instrument. So if we could go back and let me show you the fundamental value of RED, purchasing power of the consumer dollar. There we go. And I'm going to make this, okay, so if you when it comes up on the screen, and then I'm going to tell you how to get it, because we can do this for every single asset, every single one, right? And every single instrument. So when you're looking at like the stock markets, the cryptocurrencies, the stable coins that we're talking about, those are pegged to dollars, and you can only convert them into dollars. So of course, you know my favorite chart, the purchasing power of the consumer dollar. And I'm going to make this bigger. Oops. Come on, here we go. And you can see that up here in 1913, you had a buck. Just lop off those zeros and there's your dollar. But you can also, I didn't do this right. Hold on. Max, that's what I want. Okay, I think I did it now. Okay, I did. All right. So I think you can see that the Federal Reserve is showing you that the true fundamental value of a dollar is zero. That's true for every single pure government debt-based or government currency, because they ultimately inflate it away. They just keep printing and printing and printing until what's out there has zero value. And you can see how close we are getting to that zero. The only thing that's holding it there is your confidence. That's the only reason why this system exists at all. So the fundamental value is the true value that whoever created or named that asset as such, and I'll go into this a little bit more, that's the true value of that asset or instrument for its creators. Inflation was baked in to the system, which is why you see it start over on the left-hand side at $1, going down to zero, because that was the intention when they created this system. Inflation is baked into it because they know that people don't understand it. But that is how money is created in this system. Gold is sound money. Sound money is above all central banks and cannot be inflated away. They're both money. They're just the flip side of money. So how do you know? If you know the fundamental value of the dollar is zero, like I just showed you, the Federal Reserve actually showing us the true value of that, how do you know how much this is worth? Okay, well, what's it take to create this? Debt. So since they stopped in 2006 reporting how much money they're creating in this country, and most countries aren't publishing this information either, then what I use is global debt as a proxy for all of the money that's been created, because that's how money's created in this system. There's an unlimited amount of that. They can create as much debt as they want. They can print as much of this as they want, even when it goes to zero. But with this, there's a finite amount of it, whether it's in ground, above ground, even if they find more of it, it doesn't matter. Anything that is physical, there's a finite amount of it. So to get the true value of an ounce of gold, first you go, and to get the true value of any fundamental value, you have to ask, what is the single most important function that this performs for the creator? The most important function of gold is to hold its purchasing power value intact over time. So in order to know what the true fundamental value of this, you just take all the debt that's been created in the whole world. You can do it country by country, but this is a global issue, so I do it globally. You take all of the global debt that's been created and you divide it by all of the gold that exists in the whole world, whether it's above ground or still in ground. And remember, the Department of the Interior runs a report on that on an annual basis for both gold and silver. And that gets us at like, I just did this yesterday and I think it was like $41,275 for the true value, the fundamental value of an ounce of gold. And so we're spot somewhere around $3,000. Undervalued. Continue to accumulate. And that's also, by the way, when you're looking at the collectibles and you're looking at taking money out of your 401k or IRA and paying taxes and things like that, because this is so severely undervalued, this is how we pay off fixed rate debt, we recoup your fees, we recoup your taxes, we recoup your losses, we recoup everything. So that the whole system is really a complete loop all the way around, and it's designed to put you in the best possible position as we go through this reset and in the better position on the other side of it. Let me know if that did that for you. If not, have I done a video just on fundamental value? I know that I did that in the past, but that would be an easy one. If you guys want this, let me know, and I'll do that for next week. And we can really kind of dig into it with real estate, with stocks, with a number of different assets. If you guys would find that helpful, I am very happy to do that for you. So just let Joshua know, and he will let me know, and so shall it be. And okay, so that was the last question. Nope.
Actually, Chris thinks I skipped him. He said, Adam, you skipped me again. So let me make sure we get Chris's question.
Okay, so this is a question from Chris and Chris Willis. And Adam didn't skip you, but he's over there because he's training.
So if you are expecting a confiscation.
If I am expecting a confiscation.
Are you expecting it to be at 5 ounces or over?
Oh, okay. If you are expecting a confiscation, are you expecting to be at 5 ounces or over? Does it matter what form it's in, or just if it's bullion? Follow up to my question, does it matter if a coin or bar, for clarification? Okay, I'm going to take each one of those separately. So I am expecting an over confiscation, and maybe there will be and maybe there won't be. I don't really care because I have the kind of gold where it doesn't really matter. 5 ounces and over, they're going to leave you some. And what we saw in, like when India confiscated the gold, and they actually did go house to house, and that was during their denomination back in 2016. I'm pretty sure it's 2016. They just took a portion of the gold. Of course, their people are more used to holding their wealth on their body in jewelry form. But they did confiscate overtly, but they didn't take all of it. And I don't think they'll take all of it this time, but they're going to take most of it. And I don't know how much they're going to let you have, but we'll find that out. Does it matter what form it's in, or just if it's bullion? Well, it does kind of matter what form it's in, because bullion is classified as monetary gold. So if you look at what you can hold in your IRA, that has a monetary classification. Even though, this is my one piece of bullion. It's my 1 ounce gold eagle. This is my 1 ounce double eagle. Same gold content weight. Exactly the same. This I can hold in an IRA. This I cannot hold in an IRA. So does it matter? Yep. Give me the classification of the person that's spending $15 million on a coin, because that's the classification I want to be in. I don't have to spend $15 million on a coin. This is just a raw coin. This isn't even slabbed. It's not pretty. Been in circulation, lots and lots of blemishes. This is my savings gold, but it was minted in, this one is 1903, right? So yes, it does matter. And if you can hold it in an IRA, then that is not the kind of gold that I personally buy. You notice that I wear a lot of jewelry. The reason why I wear a lot of jewelry, and you also, some people have said this is so messy, but I use this all the time, because gold and silver in any form is monetary at its base. So if it's in some kind of collectible form, then you have a much better chance of keeping it in an overt confiscation. And quite frankly, if I needed something, you think I would give a crap about clipping off a piece of sterling silver? Sterling silver, 92.5% pure. Mexican silver, also 92.5% pure. Let's see. Was that it? Okay, Chris, did I answer your question?
Yeah, he didn't follow up, so you're good.
Okay. Well, be sure to check out our most current videos on stable coins. That's going to be published on Thursday. And I have to tell you that I do consider that one of the most important pieces that I've done. I'm also doing one on the tariffs and the comparison between the Smoot-Hawley tariffs back in 1930. And we'll be talking a little bit about confiscation then too. Wait until you see this. You know, making this comparison, that's why I love my job. Well, one of the reasons why I love my job is because I am constantly learning new stuff. I am constantly seeing new stuff. And even when I look at something that I've looked at 100,000 times before, when you look at something just a teeny weeny bit different, it is amazing what you see. And I want to thank each and every one of you for being here and, and helping grow this channel and share, because we are all in this together. And I 100% know that we're so powerful together. We can make a positive difference for a lot of people. And even though we're not in our new offices yet, and they're all pretty and nice, we still love to see people in where we are right now. And I think those are pretty nice too. But come and visit us at our new office, and we'll see you the next time. And until then, please be safe out there. Bye-bye.